Doris, I'm here to show you about my stock account. Today my stock account has made a loss of $29. US stocks closed down for the second straight day, and the Dow Jones Industrial Average closed down 245 points. So let's first take a look at my account. Today, the net asset of my account is $67,570.62. The positioning in the total PI in my account is a loss of $5,222.49. Today's PL is a loss of $195.09, which is a loss of 0.26%. Today, United Natural Gas showed a loss of 4.72% to 6.85, and then rose 0.29% to 6.87 in the post market. The SQQQ rose for 0.41% during the market and made a loss of 0.82% in the post market. Today, the market generally closed lower. Dow Jones Industrial Average closed down $0.72. Nasdaq Composite closed down 0.16%, and S&P 500 closed down 0.47%. The industry is generally closed lower, and the oil and gas, the energy industry is generally closed lower with a loss of more than 2%. This week, markets watched testimony from Federal Reserve Chairman Colin Powell in Congress. The energy sector was the biggest decliner among the S&P 500 components. U.S. new home construction data in May far exceeded expectations, pushing the housing sector higher. FedEx will report earnings after the close today. The company's performance is often seen as a barometer of the economy. Monday was the Juneteenth holiday, with the U.S. financial market closed. After the long weekend, investors were cautious. Strong performance last week ahead of the long weekend. The S&P 500 and Nasdaq rose 2.6 and 3.25% in the week, both recording their best weekly performance since March. The S&P 500 also recorded its fifth straight week of gains, the longest consecutive winning streak since November 2021. The Nasdaq also rose for the eighth straight week, the longest winning streak since 2019. Last week, investors appeared to accept the Fed's decision to skip a June rate hike. Fed Chairman Colin Powell said that at the news conference on Wednesday that the Fed has not yet made a decision on policy ahead of its July monetary policy meeting, but the monetary policy makers expect two or more rate hikes, each by 25 basis points later this year. The decision to skip it in June broke the Fed's record of 10 consecutive rate hikes. Stocks have been rising, although Mr. Powell insisted that future Fed policies will still depend on the data. With the economic data sparse this week, investors are trying to gauge whether last week's strong market sentiment can continue there. Confidence among both institutional and retail investors is at their highest level in more than 2 years. Chief of U.S. stock strategist at Morgan Stanley, Mike Wilson, said on Tuesday, "I think the stock market is already very tight, and market participants are worried about missing out on a potential bull market. Given our basic view of growth, we find it difficult to accept the current excitement. He said weaker fiscal support, lower liquidity, and lower inflation will drag down U.S. stock market rebound in the second half of the year." New York Fed President John Williams will attend a corporate governance event on Tuesday in New York City. Fed Chairman Jerome Powell will testify before Congress on Wednesday and Thursday. Greg Erlam, senior market analyst at Oanda, said the focus this week is still on the central banks and whether we are as close to the end of the tightening cycle as everyone wants to believe. The market has been overly optimistic. The data are not sufficient to justify a change of course. This year's rate cut now looks more like fantasy than reality. On economic data on Tuesday, U.S. housing starts unexpectedly surged to a year high in May, with some higher construction permits, suggesting residential construction is improving. Housing starts rose 21.7% annually to 1.63 million households. Government data showed on Tuesday. Single-family housing starts 18.5%, as did apartment buildings and other multifamily projects. Construction permits climbed 5.28% to 1.49 million households. Single-family house permits have increased. That's all I have for today. Thank you for listening. Don't forget to subscribe. See you next episode.